again. Woo! We are dream facilitators. And for about 36 years, I have been helping to make dreams come true. And many of you in this audience have helped to bring those dreams to life. And it's so exciting. Those that I don't know that my paths haven't crossed yet, I am so happy to connect with you today. And I'm grateful to have Kreg Wagner, Legal Counsel of the Utah Association of Realtors, with us too. I will take about 20 minutes and then I'll turn the time over to him. My team and I are with Fairway. We office in the Sugar House area, right across from Sugar House Park, so you can place us there. You probably receive my monthly invitations to Lunch and Learns. Thank you for being so kind. I appreciate that. I have been doing that now 3 to 4 years. It's a passion that I have. I'll still do it, and I want to educate you. I want to try to coach you from the years of coaching. I want to share insights with you. So come if you can, and if not, we'll miss you, but we have lots of fun in our classes. And I also want to tell you, I know it's nervous, all these changes, but may I... Let's see here. I have a spoiler alert for you. Do it manual. New battery and everything. All right, we can do it manually. Page down, right? Okay. Steph is on my team. Okay. Not to spoil the ending, but it's gonna be okay. You have two choices. You can run for the hills, or you can embrace this. And we get the opportunity now to try to figure out the value we bring to our customers and connect with them even better. And that is surely a win. So let's view it as an opportunity. Now, I also want you to know that I know what you're thinking. I can empathize with you and I can understand, because I'm going to take you back in time. Travel back in time with me. I know what it's like to have your value proposition questioned. Many of you might remember the 2010 Dodd-Frank Act. I was 18 years in the business, full commission, and it was stated that loan officers made too much money. And in fact, we had our commissions reduced. And the industry from that credit crisis had many changes, and we had to go through those. Some of you were in the industry. I could either run for the best years ever. Now, in my industry, on my side, I am a commodity. What's your rate? Right? So I had to work really hard at coming up with and articulating my unquestionable value. And that's what you get to do right now. So that's the real question. How do I effectively communicate the long-term value and the benefits to my clients? Well, some of you have it all figured out, and others that I've spoken to, not so much. So from where I sit, I want to give you 5 areas of value that I see great real estate agents bring to spur your mind and your ideas. The first, Stephanie, I think I need you, sorry. Maybe that's it. The first, education. Thank you for your patience. Education. That's probably the foundation of what you give. You're not just doing transactions, you are educating, right? You're educating on the market. You're educating on return on investment. You're educating on investment opportunities. You're giving legal advice sometimes, right? But that, no, good answer. That informed approach helps create confidence and makes you a trusted advisor, and people buy from who they trust. So you are an educator. The second area is relationships. You know people. If someone represents themselves, they don't know, for example, the buyer, the seller, the listing agent, agents in the office. Somebody today told me they had a perfect house for a client we're working with. It's not yet on the MLS. You got that insider scoop. Relationships are so important, and that's what you bring to the table. The next, your team of professionals, your inspector, your lender, your title company, everybody you've put together to make it smooth. A customer representing themselves will not have that. Of interest, I had a customer who wanted to list their home and interviewed 4 agents. And she chose one, and I said, what made the difference? Because I knew who she interviewed. They were all rock stars. And she said this in her email, and it's hard to read up there. XYZ Homes has a smart business model. In addition to their real estate sales experience, they provide handyman service, painting services, window cleaning, staging services as needed, a full-service hands-on real estate boutique. And she said, I loved that. So you have a team of professionals that you can bring. The fourth, technology. Your commissions go to pay for the MLS. The MLS is fabulous. It widens the search on the properties, right? You bring all kinds of technology to the table that someone representing themselves wouldn't have. The next, execution of a long-term commitment. This is what sets an agent apart, a great agent apart. You're not just there for the transaction, you're there for years to come. You're going to give market updates, advice, you're going to call them, you're going to check in on life issues. Hey, you're having a baby and you need another home. You're going to talk to them at tax time. Some of you here help with tax appeals. Oh, you've just closed. Have you thought about a will and estate planning? I've got a guy. Oh, you need a CPA? I've got a guy. You are adding value. And a double bonus every time you are contacting that client, you're buying a brain cell so that they think of you and keep you top of mind when they hear of someone who needs a great agent. That is the secret of my success all these years. 25% of our business last year came from post-closing calls to our customers to add value. Ding, 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 by the way, I need a home. Some of you in here, we actually had you helping with the buy side, the sell side, etc. That's how we generate referrals over the years. But we are seen as a long-term strategist. Now, for the sake of time, I have scripting on this. I will send you my slides. Some of you, again, have this all figured out. Others might wonder, well, how do I talk about education? How do I talk about technology? How do I talk about this? And I've written out some of the things that I have seen or heard or would suggest. They're my words, not yours, but they may spur something in you that could be a key for the discussions that you're having with your customers. You have this figured out with your listing, your sellers, but now we get to do this for our buyers. One thing I'm going to ask, though, on scripting, I think you'll come off better if you don't badmouth the NAR settlement, and if you embrace it and say, this is an opportunity for us and for our firm, and we're looking at it as such, and blah, 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 okay? So, do me a favor, but here are your scripts, and I'm just going to go, I'll get these out to you. My next favorite topic, collaboration with your lender. Well, now is the most crucial time to have the right lending partner. And many of you have your lender figured out, and that is so awesome. If you don't and need a second opinion, please let's have a conversation to see if our approach might align with your needs or your objectives. But your lender needs to be an advocate for you. Several other thoughts. They'll help you articulate and advocate your value. Oh, she's wonderful. I have seen her win a transaction over others. She will take good care of you. Is she worth her price? Every penny. Just a lender who is your cheerleader. You also want a lender who is going to assess buyer finances early, because we got to talk about commission. What if the seller does not pay it? This reminds me of 2021, that wonderful, fast and furious year. Didn't you love it? We talked about appraisal gap, closing costs from the very first discussion. Sellers were not going to pay that, and there was a good chance you had an appraisal gap. Well, what are we going to do about it? And we had that collaboration. We're now talking about real estate commissions. So, Kathy, what are you going to charge on this, or what? And she'll say 3%, 2.5%, 1%. We know that. Thus, if you're going to houses where a seller is not going to pay that, we need to make sure that can be paid. So there's no surprises and no train wreck at closing time. Isn't that awesome? Then, how about your long-term, to support your sustained long-term success? You're both in that together. You're a partner. You don't go away at closing. Our 6-month and our year anniversary gifts and calls, we are joint with the agent. It's nice to see you. Here's a book on finances. I can refer you a financial planner. Love, Sharla and Ann. So we're doing that. You just want someone to help you. There's so much to do. If you're all singing off the same page, make sure you have a great discussion with your lender about how you're going to win in this market. Okay, commission. This is what I promised you all. Let's talk about commission payments. Those who were at my last Lunch and Learn, we talked about this, but you've got traditional payment by the seller. The seller includes it in the list price, just what you are doing right now. And that's going to continue for some properties. So we know how to handle that because that's what we're doing. You can increase the price to cover it, and then the seller can do that credit. I'll show you some examples, and that may have to be. So we want to be prepared on how that works. I'm going to call this the appraisal gap strategy. What if you raise the price to cover it, but the appraisal doesn't come in? Then what? I'll show you some scenarios, okay? That's probably going to be a real thing coming up here. Direct payment. The buyer can simply pay it, and they may want to. The key here is proactive communication up front and early so that everyone is singing off the same page. What if the seller doesn't pay, and what if they do? Let me show you a couple of examples. We're going to talk about a 3% buyer commission. And I'll go through each of these. Sorry if in the back you can't see it, but I'll send these slides out to you. And there's so many scenarios to cover. I'd be happy to do a one-on-one with anyone and go through the math. My illustration here, spoiler alert, is to show you there's not a big difference when you start raising the price to cover. So don't be afraid of it. It's going to be okay. We're going to go over 3%, $500,000 purchase. This is easy math today. You got the purchase price, you got the appraised value, loan amount, loan to value, interest rate, the term, the payment, is there mortgage insurance? Then at the bottom 3, what's the customer's down payment? What are the closing costs and prepaids? What is total cash to close? I've taken some liberties here to do easy math, okay? Our first one is our traditional. This is what we're used to. You'll all know this math with me. $500,000, 20% down is a $400,000 loan. Yes? Okay. 80% loan to value. What if we had a 6.25% interest rate? I'm not quoting APR here. I'm not quoting a rate. I'm just using an illustration. 30 years, the payment is $24.62, okay? And I've yellowed that because I want to compare it with the other columns. No mortgage insurance, we got 20% down. The customer comes in with $100,000, easy math. What if they had $10,000 closing costs and prepaids? Easy math, that's $110,000. Are we on the same page? Okay, good. All right, then, what if you raise the price to cover? It's a little more tricky math. $515,000, you got $15,000 in 3% commission, right? So you want to do not $500,000, you go $515,000. Customer wants to still put 20% down. They could do a 412 loan. 6.25%, what's the difference in their rate? Their rate is $75 difference. Look at the cash to close. 103, 10,000 costs. Instead of 110, it's 113. Subtle differences, right? That's not a big deal. When somebody's like, oh, I have to pay the commission. Oh no, oh no. We just run the numbers and help to keep everyone calm and manage expectations. And there are door A, door B, door C. You've got this, what fits the best. So there's choices. Everybody loves choices. That's not a lot of difference. That's kind of exciting. What if the appraisal doesn't cover? This is my favorite to show you. Stay with me. You got a $515,000 price because we're building it in the price, right? With me so far, $15,000. What if the appraisal does not come in and it supports the $500,000 original purchase price? And I have, as a lender, I lend on the lesser of appraisal or purchase price. So I've got to lend on that $500,000. Well, the customer wants to put down what they were going to put down in this illustration if the appraisal came in. They're saying, I can put 103 down. So I'm saying, okay, let me make my loan 412. Oh, 82.4 loan to value. Ding, 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 ding. You've got to pay mortgage insurance. Hold on. 80.01 to 85% is the cheapest conventional mortgage insurance. And mortgage insurance rates have come down. Have you noticed? I don't want to say it's pleasant to quote mortgage insurance, but it's pleasant to quote mortgage insurance. The higher the credit score, the less it is. So they get $38 of mortgage insurance. Their down is still 103, 10,000 in costs. What? It's the same. When I say this to customers, they say, and this is so cute, one customer said, that's black magic. I'm like, yes, it is, and it's so amazing. But we can do this. And for $38 more. Now, the big difference, I think I have this pointed out, $38 over this one, that's $100 to be able to take care of you, and life goes on, right? That's what's cool. We just explain all of the situations. Now, they're going to really like you to find a house where the seller pays it, but they can have these options. Or, what if you want to pay it yourself? Here's the fourth pillar. $500,000 price, we're back to that. 20% down. My payment's the same as the first pillar, right? No mortgage insurance, but look at their cash to close. 115 because you build in the commission. 10,000 closing costs, say they're 125. I want this all day, every day, and twice on Sunday, but they have choices. So this is exciting. Now that's 80%. I did an illustration at 90 to show you the black magic going over 95 or 90% to 95. The key is that mortgage insurance on every 5% changes, okay? But high credit scores, 2 borrowers, it's the cheapest. What if somebody has low credit scores? We look at FHA. There's all kinds of things that a lender can do. But if they have low credit scores, we can also do a quick fix and say, is there a way we can boost your credit scores up to make it as pleasing as it can be? It's really just speaking to the customer. So in my slide deck that I show you, I will show you the next example. I won't take time to go over it, but this is 10% down, and may I just show you the big difference between the old way seller paying costs and raising it in the price is 85 because you have mortgage. That's nothing. And then adding mortgage insurance, $23 difference. I mean, guys, it's not a big deal. And then there's their direct payment of cash. So we can study these together. We can even, if you have a borrower and you say, what if I want to get these scenarios and options out of the way before I meet with them, I'll go over that one-on-one with you. Okay? All right, so there you go. Now, I know it's nervous, facing change. I have a present for you. I'm so excited. Okay. I have a way for you to add value to your buyers and close more transactions. Woo! Such exciting news for buyers. At Fairway, we have our hard hats on. What? What do you mean? I can now do cosmetic repairs in the purchase price, in the loan. You're welcome. Woo! Yes. Okay? Okay, you have a flyer in your bag. And I am going to make it my way through all 173 of you and tell you about this, because it will be a great tool in your belt. I have been with Fairway 5 years. I had this program at my last employer, and we did a ton of them. Then I left, didn't have it, and I have been saying, hello, Fairway, please bring this product back. They did, and it's live as of last Friday. So I have it. Now, conventional loans only, but listen to me, and this is exciting. You'll have questions, but I'll help you. You can finance small-scale projects or fix up an aging home. Primary, second homes, investments allowed, 10% of the as-completed value is allowed. What if you had a $500,000 home and you put $50,000 in, and that $55,000, you're going to have $55,000. I have a 15% contingency that's there. If they don't use it, they get it back. And we have $800, $825 of fees. Draw inspection fee of draw admin fee of $500 is fine. $150 final inspection when we release the draw in 6 months. Hello. You get 6 months to finish this work. And a $75 date down. $800 of fees. The interest rate is very close to a purchase within an 1/8 or a quarter. And it is so phenomenal. We will do as little as 3% down. I know. Hello, Babs.
How is this different than a FHA 203K loan?
Easy, wonderful, beautiful. FHA 30, give me the slit my wrist now. No, I'm teasing. I've done them. I do them. I've done renovation my whole career. This is simple. This is meant to be an escrow, if I can use that word. So you have the purchase contract. We don't even need to bother the seller. You get a bid from a contractor. I've got a couple that I can refer. You may have them too. The bid has to be finished in 6 months. It has to be 10%, so it can't be everything. Fencing, garage. I want to finish my kitchen. I fix my kitchen up. I want to do the bath. I want to have fencing, landscape, central air, roof, gutters, windows, doors, things of that nature. New fresh coat of paint. Take the bid. It's added to the purchase price, just a second, and then we lend on that. The appraisal has to support. It's the lesser of purchase price and improvements or appraisal. We're just going to assume the appraisal will support it. I can do 3% down. My favorite in having this product is a single mother, 3% down. You've heard people say, oh, this house is great. If only it had this. I don't have the money to fix it, right? She said this house is perfect, but my twin daughters, I'd love them to have their own bedroom. Ding, 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 ding. There was an extra big bedroom. A contractor bid to put a wall in it and create 2 rooms. And we did it, and we closed, and the 2 little twins had their own bedrooms. If you were to ask my little daughter Lexi, who is now 19, 20, she, when she was young, told her school class when they said, "What does your mom do?" She said, "My mom gets little girls into their own bedroom." And I do. Let's do this, right? So for now, until everybody else catches on, this is a Fairway exclusive. I have done renovation and construction my whole career, so with many of you. Let's go. I'll walk you through. But you have many houses that need some love. We can do it now, and it is phenomenal. The best thing in the world. Isn't that so great? Yes? Woo! Okay. If you're not happy now, you can have this add value to your customers. I have a way for us to do cosmetic repairs. It's anything that adds value that can fit in the 10% and be done in 6 months. So there you go. Yay? We're talking about unique value proposition. I'm almost done. You need one. If you don't have one, get one. I would be remiss if I didn't share with you mine. We have 3 parts for our agents. We are an insurance policy against your commission. What does that mean? When we say we're going to do something, it will get done. You can be assured of that. Just all the many years of seeing this, seeing 1 of everything, 7 of everything, whatever. We are speed to respond and speed to close. I've perfected this team of mine over the years, and we are well oiled. And we can just do things so fast to compete with cash, to do multiple offers, and to get you paid faster. We're your partner in success. Our innovative programs, our lunch and learns, are here to help you win, to grow, and succeed. Another way that you can try to figure out your unique value proposition is write out your resume. All your accolades, all your awards. Have that just put you on a high because you've done so good, and then whisk it away, because that's not really important. Some of you have said, "Show me your resume so I can tell that to my clients." This is Sharla's resume, blah, 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 blah. What I want you to do with your resume, it will spur things in your mind of what you've done and how great you are. I think the better exercise is to have 3 important, wonderful things that mean something to a client, and that's the value you can bring. If I were doing that, I would say, number 1, our experience. I have been doing this at least 3 decades now. I know how to navigate, seen 7 of everything or whatever. We can get this done, and that builds trust, and that has people buying from you if they trust you. If you are new in the business and don't quite have 36 years under your belt, partner with a team, or your brokerage will have the experience, and you too can say, "We are experienced," because that feels good to a customer. The second thing, team efficiency. I have built a dream team. I have the most well-oiled team, and I can say that only once in my 36 years has someone called us the nightmare team. I'm proud of that, okay? We want to live up. Are we perfect? No, but we are really, really, really good. We can close fast. We're well-oiled. We compete against cash. We are competing against multiples. We just get customers to the finish line like no other, and they feel good. If you don't have team efficiency, grab yourself some teams, title company, anybody on your team, lender, and you make them efficient, pick the efficient ones, and you too can say you have team efficiency. That builds confidence in a customer. The third thing I would say is service excellence. What some of you know about us and some you don't, I am number 1 in Fairway, I just say that to lend credibility, in our customer satisfaction scores. I am number 1 in Utah, experience.com, in our customer satisfaction scores. I have nothing to do with that. I can't create that by doing more loans. That is my customers telling us that they love us. All the passion, everything we do, it is worth it. They tell us this through their 5-star surveys and returning over and over and encouraging their family and friends to come to us. If you might not have that, partner with someone who has service excellence, because that matters to customers. They don't want surprises. They want to be guided. And those will be your wonderful, wonderful value proposition to your customers. Now, change is hard. I look back at the Frank-Dodd Act, Dodd-Frank, whatever it's called, and it made me a better loan officer. It made us better in the industry. This change can make you a better agent and set you apart. Embrace it. And if you wonder where to start or what to do or what the lending side is all about, I'll be your friend in the lending industry. Call me, let's collaborate, and I will help you win. Thank you. Woo! Good. Okay. We're going to turn the time over to Kreg. We need a minute to get computers swapped out, and he'll take your questions. And then on any questions for me, I'll be here after, or we'll speak again. But we're just so happy that you're here, and we're here to help you win. Stephanie, you probably need to come help Kreg. Thank you. This probably, yes.
So this will be pretty seamless.
Okay. And then,
Yeah, you're already on the adapter, so that works.
Should just be plug and play.
Yeah, this is all I need.
Beautiful.
That's it.
Now let's just check your volume level on our mic here.
Yeah, let's get it.
We can clip it in close to center. I think this is theirs. Their stream, I think.
Oh.
So I think you're maybe clipping both on. I'm not sure.
Okay.
But I know this one's ours.
All right. So how would I? What's the best way? Just like right here.
Great question. I think so.
Can. There we go. And this is the. Okay.
So yeah, somewhere about there.
Okay. Testing. Maybe even a higher. Let's go a little bit higher. Testing. Is that pretty loud? Can you hear me in the back? Testing. Feels like.
I don't want it to be too loud because then it could peak on our end.
Okay.
And kind of distort your voice. Because everyone's talking right now, we still hear it over them.
Okay.
I think it'll be good volume-wise. We can always adjust that, but I think that should do it.
Okay.
And then this guy.
See, so are there multiple screens? But I'm not seeing.
It looks like the way this is set right now is you have extended screens. So if you want to change it to mirrored screens, you can go to your settings.
Okay. Can I do it right here?
Potentially. In displays here, let's see. Scroll down a bit. In displays, you click main display right there.
Where?
That little, and then you hit mirror. So now
Okay.
it'll all be on there.
Okay.
You should be able to just bring up.
Perfect.
And then
Okay. Beautiful. Perfect.
And then when you're done with that, you just want to unclip it and leave it on there. If you travel too far with that mic on, it could disconnect from the system.
Ken. Okay. Awesome. All right. Are you guys ready? Let's dive into this. Let's dive into it. Man, I've talked to Sharla a little bit on the phone, and leading up to this, I don't think I've met a more positive person. She is fantastic. That is awesome. That is awesome. I am the complete opposite. No, I'm just kidding. I look out in the crowd and I see familiar faces, right? And what is important are the relationships. I mean, those don't go away. I mean, obviously, tomorrow, I mean, many of you are members of UtahRealEstate.com. Things are going to be changing, right? The offer of compensation is no longer going to be visible on the MLS, right? There's no longer going to be a field there. You can't put it in the age remarks. That is a big change. And certainly we want to be as supportive as possible. I don't necessarily want to go into why we landed or NAR landed where they did. I don't know if that's necessarily helpful. We're at where we're at. And I want to go into ways that we can be supportive to you. I wanted to go through some of the new forms and adjustments. I do want you to know that everything that we've done at the UAR level has been intentional. It's been thoughtful. And I understand that there was bated angst, wondering where were the forms, in late July or mid-July. Frankly, we had these forms approved back in mid-June. And that was after meeting for months as a forms committee, having discussions on a bi-weekly basis. And you may say, man, you guys didn't change a ton. And that's accurate. But we had discussions because we wanted to go through as many scenarios as possible, as many what-ifs as possible. And frankly, after the next couple of weeks, we may make some changes based on your experience because we want it to be as user-friendly as possible. But the reason we didn't release the forms in July when we were planning on doing so was right when we were about to do so, we learned about California and their forms and the DOJ and kind of the implications there, where the DOJ started investigating the forms making process in California. And that was based on a Consumer Federation of America report about how user-friendly the buyer-broker agreement and listing agreements were in California. And so we saw that, and we paused, knowing that we had a hard deadline of August 17th where the changes need to be implemented. And we still need to give you enough time to know, okay, what are we to be trained on? How are we to use these forms? And so we waited. We were gathering intel from other states, looking to see what other states were going to do, knowing full well what the terms of the settlement allow for. The terms of the settlement allow for offers of compensation, just not on the MLS. That is still legal. That is still permissible. In spite of whatever the DOJ says, that is still a legal option, and that's something NAR fought for. Now, whether or not you guys utilize that method is completely up to you and your clients. But California voluntarily removed that option from its forms. So we wanted to gather information. Okay, what are other states doing? Texas, Florida, they're keeping it in. Okay, and so when we analyzed all of this, waiting as much as possible, we wanted to give you as many options as possible. So if you notice our forms, and we have the new form, the brokerage compensation agreement, it allows for the offer of compensation. And we still wanted to give you as much time as possible with the training, but that's why they were delayed. And I appreciate all of your patience with that. It wasn't because we didn't have the forms ready. We were trying to gather as much information as possible. So I'm going to dive into the forms, and I'm going to highlight some things. What I have found has been beneficial for everyone here is that we kind of limit questions to the form that I'm talking about. And then if you have related questions, we can maybe dive into those. Frankly, we could spend hours going through what-if scenarios, but I'm going to kind of give the most basic kind of overview, and then we can dive into some of the what-ifs. Okay? So the August 17th deadline, that is when the practice changes need to be implemented. And many of the MLSs, including UtahRealEstate.com, are implementing these a couple of days earlier just to be ready. That is the earliest date that notices to the potential class will be going out. Okay, so some of your sellers may start to get these notices in the mail, and they can opt in and they can get their $5 or $10, whatever it is. Yeah, they can get their cut of the settlement. But that is where you're going to then highlight to them, okay, here are some of the practice changes. Here's how it's a little bit different in Utah as to how we were doing things, but it should look very familiar because we already had agency agreements in place. We already had clear delineation about the negotiability of compensation. And we already had things that said they weren't fixed. They weren't set. And those are part of the terms of the settlement that Utah already had within its language. Okay, so let me go ahead and highlight. Let me start first with a question that I'm getting over and over. There we should be here. It's just a little anticipation of what I'm about to show. Let's you guys are waited long enough. Let me just. Okay, here we go. I think it's showing on my end, but not on your end. You really want to see the language. Okay, perfect. Okay, that's Yosemite, but that's not what I'm showing you. Okay, here we go. The real estate purchase contract. Okay, I want to pull this up, and I'm going to make it as big as possible so you guys can see this. You may have seen in the division newsletter that the Real Estate Commission approved new real estate purchase contract language. Okay? That doesn't mean that it's finalized. It just means that the Real Estate Commission has approved it, and they approved it unanimously, that it then goes to the Attorney General's office. Okay? The real estate purchase contract is not a UAR form, it's a state-approved form. So it's a form that you guys have been trained on as licensees. And so that is something that is then approved by the Attorney General's office. Our understanding is that it's still at the Attorney General's office and that their target date is August 17th. That doesn't necessarily help you a ton, but it gives you some information as to where it is and what we're kind of doing. This is the new language that the Real Estate Commission approved. Okay? It's just one section being added to the REPC, so it's going to be under section 4.3. This is the fees, costs, and payment obligations, so that made sense that that's where it would be. And it's a new section dealing with real estate brokerage compensation. Now, the DOJ themselves has opined that we are okay with the buyer and seller negotiating compensation in the purchase contract. And so this is a way to help facilitate that. I'll go into the addendum that also kind of highlights this same language, but this is what we anticipate will be approved. But I can't make any guarantees until the AG's office approves or raises any concerns that they have. Really what it does, it allows the buyer to ask the seller for compensation. You go ahead and can negotiate that directly in the check boxes there. If no box is checked, then there's no compensation being offered. And where I get questions, and I'll go through this with the addendum, is this next sentence where it says, this payment shall be made in addition to any other compensation agreed to by the seller's brokerage to the buyer's brokerage, if applicable. Okay? If this language wasn't here, this statement would still be true. Okay? This statement here is for your benefit and for your client's benefit. It's not meant to create confusion. What this is meant to make clear is that any sort of agreement between the brokerages, that's a separate contract. An agreement between the buyer and seller, that's a contract between them. If they agree to both, then they're added together. Okay? It's supposed to highlight that. But if you only have one agreement, in addition to zero, you add zero to whatever you've agreed to. It's not going to be overly complicated to that. Yeah?
I was approached by one of my agents that said, if I have a buyer-broker agreement now, and I ask for 1% commission from my buyer, can I also ask for 2% commission from the seller?
Okay, so it sounds like you guys already know the answer to that. So part of the terms of the settlement, and that's not a bad segue, but I'll address it in the buyer-broker agreement. Maybe I'll use the highlighted version so you can see it more apparently. Is this idea that you can't receive more than what's specified in your buyer-broker agreement. And the whole premise behind that is to make it clear, what is the value of your service? What exactly is the buyer paying you for? And I know that oftentimes that obligation is offset by a third party, but that's what's supposed to be made clear under the terms of the settlement, that you do not be paid over that amount. And it has to be a clearly ascertainable amount. You can't put in your buyer-broker agreement, well, whatever the listing broker is offering, or whatever the seller is willing to pay. It has to be a clearly ascertainable amount. Okay? And so from my perspective, and take this with a grain of salt, I'm not a practitioner, but I would start with the amount that I want to be paid. Okay? I think Sharla did a great job about talking about professionalism. I think we can do an even better job as an industry highlighting that we are professionals. Okay? The best analogy that I can think of is an attorney-client relationship or representation. Okay? You have the broadest exception to the unauthorized practice of law, in my opinion, in the state of Utah. Meaning you can fill in purchase agreements, you can draft contractual language, and oftentimes many of the things that an attorney can do, you can do on behalf of your clients. Now, you obviously don't give them legal advice, but they do rely upon your expertise and competency. Okay? And so those are going to be things that I would highlight with my value proposition as to why I'm charging the brokerage fee that I am in the buyer-broker agreement.
But you filled this out before the part you just showed us on the Rep C.
Yes.
So could that change?
So you fill it in, what is the value of your services? And then in a discussion with your buyer, if they want to be offset, if they want that obligation offset, then they're the ones asking the seller, hey seller, will you pay my brokerage because I have an obligation under my buyer-broker agreement? Seller, will you satisfy that? And that's permissible. You can have that satisfied by a third party. You just can't receive more than what you've contracted with the buyer. That makes sense? Okay? So I would start with what your value is. Don't undersell what your compensation is. And I don't care what it is. I really don't. But I care that's what you've determined the value of your services along with your brokerage. Okay? So the buyer-broker agreement, if you look at this, and I'm going to actually kind of jump back before I dive into this. So looking at the Rep C, the real estate brokerage payment addendum, my guess is you'll see this addendum in most offers going forward until the boilerplate language of the Rep C is modified. So probably in the next month or so, this is an addendum that's probably going to be a part of almost every contract, which obviously you're going to have to highlight to your seller the advantages of this or the disadvantage, and they're going to be the ones making the decision as to whether or not they are going to agree to this contractual term. Just like they would agree to closing costs or deadlines or earnest money amounts or purchase price. I mean, it's going to be a negotiable part of the contract. Yeah?
When you showed the new language in Rep C on the first slide,
Yeah.
you said that there was a contract between the listing brokerage and the selling brokerage for compensation.
So what it's saying, and this language actually is in this addendum here. So if it says this payment, so this agreement between the buyer and seller is in addition to any other compensation agreed to by the seller's brokerage to the buyer's brokerage, if applicable. Okay? You will know if you've entered into a compensation agreement. It doesn't just happen.
So, I mean, just for an example,
Yeah.
you have a buyer-broker agreement with your buyer for 3%.
Sure.
That would be in addition to,
No, so what this is describing is an agreement between the respective brokerages. So the best way to describe it right now is the MLS. That's an agreement between the cooperating brokerages. That's what that is referring to, or it could be a separate agreement entered into between the respective brokerages. So it's an agreement between the brokerages, not an agreement between the buyer and the buyer's brokerage or the seller and the seller's brokerage. Yeah, the MLS compensation will no longer be there, but we do have a form that allows for the brokerages to enter into an agreement if they so choose.
but you'll have a listing agreement that says the seller is already willing to pay.
Yep. So we'll.
It has to be in the contract.
Yeah. So we'll.
In the real estate purchase contract.
Yeah, we'll dive into the listing agreement and the authorization. But what I'm saying is right here, this is where a buyer can have that obligation under their buyer-broker agreement offset by a third party. And more than likely, it's going to be one or the other. Either it's offset by the seller in the purchase contract, or it's offset by the listing brokerage through a compensation agreement between the two
But you're
brokerages.
saying a seller is going to look at that offer
Yes.
and say, I already signed an agreement that I pay 2.5% commission. Why are they asking me for 3%? Now I'm paying 5.5% commission.
Sure.
Because this is saying this is in addition to what I already agreed to.
No, so your authorization under the listing agreement is simply an authorization to advertise or market compensation. And I'll go through the listing agreement, or the new language there. But that in and of itself does not create an obligation to the buyer's brokerage or to the buyer. There still has to be an agreement entered into. Right now, the MLS is the contract. And that's really easy. It's seamless. It's, participating parties. Now there has to be something to replace that. So even if the seller authorizes you and advertises it, doesn't mean that they're going to have to pay it, because it depends on what the offer says. The buyer may ask for something less than what the seller has authorized. Great. Now the seller realizes that differential. They get that benefit. Okay, excellent. Are these questions about this addendum? Okay, yes.
So this feels redundant to the Rep C,
Yes.
but we want both.
The reason why is the Rep C language has not been approved yet. So this is going to be utilized until the Rep C language is approved. I'm giving you kind of not a sneak peek, but I'm showing you what the commission has approved, but we're still waiting approval from the AG's office.
So this form is going to go away once we have the new Rep C.
More than likely it's going to go away, but it could be used to counter. I mean, there could be ways that it could still be used. Yeah?
Could we add this to the portion of the MLS where it says, additional document?
No. So that's a great question. That's kind of a segue of, well, what are you allowed to do when it comes to advertising on the MLS? You may not advertise in any form or fashion or create a method utilizing the MLS to offer compensation to a buyer's brokerage. So even a link to a form that is like this would be inappropriate. A link to your website that displays offers of compensation would be inappropriate. Okay? Showing time, aligned, any of those cannot be used to facilitate offers of compensation. Outside of the MLS, if you have authorization from your seller, you may advertise and offer compensation. But the MLS may not be used as the means of facilitating that advertisement. Yes, and then right here, and then right here.
So can you just clarify the term?
Yes. Yeah. So that in addition language is simply to highlight that if you, the listing brokers and the buyer's brokers, have entered into a compensation agreement, that would be added to this amount. Okay? Now, if there is no agreement between the respective brokerages, then the in addition doesn't apply because there is no other outside compensation agreement. Okay? I'll give you an example, and I know the MLS is going away. This form has been in existence for over 5 years now. Okay? And so oftentimes on the MLS, there's an advertisement for compensation. Let's just pretend they're advertising $1, which I've seen offers of compensation of $1. And let's say your buyer-broker agreement says 2%. Well, you have a couple of options. You could reduce your compensation from 2% down to $1. You could say, buyer, you're responsible for the differential, so 2% minus $1. Or you could, right now, and I know it's only one more day you can do this, but you could, sorry, I'm not sure why I did that. You could ask the seller, using that addendum, and ask them point blank, would you pay, whatever the dollar amount is, or the percentage that you want. And that would be seller agreeing to that plus $1. Okay, plus $1. So you will know if you've entered into a separate compensation agreement, but the only reason that language is there is to highlight that those two things will be added together. They do not negate one another. They don't cancel one out. Okay, and even if this language wasn't here, it would still be that case. And so this language is here is to highlight, look, if there is a separate compensation agreement between the two brokerages, like there is right now on the MLS, that would be in addition to this amount agreed to between the buyer and the seller. It makes sense, and I know that, again, most often I would anticipate that it's just going to be the buyer asking the seller in the Rep C, and that'll be the only agreement in place, right here.
So, I know that we cannot advertise on the MLS compensation.
Right.
I've heard rumors that there could be an additional website that's not part of the MLS that would have brokerage listing the compensation for their specific properties.
Yeah.
Is that legal?
So the comment was, well, what about a website
I've heard about third parties wanting to do this.
that comprises all of the listings from respective brokerages and advertises compensation. We won't call it a multiple listing service, but we'll call it a gathering place for offering of I don't know what you'll call it, but I know what you're saying. I would be hesitant to do something like that because of the very reason we have almost $1 billion in settlements, is this idea of when brokerages are advertising one another's listing, the accusation is collusion. The accusation is antitrust or anti-competitive behavior. And I understand the premise behind, like, again, I disagree with that premise, but that would be the accusation, so I would want to steer clear, and I would only want to advertise my offers of compensation on my website as opposed to advertising what other brokerages are doing.
But your website cannot have a link to the MLS, do they?
No, the inverse. The MLS can't have a link to your website, but your website could have a link to the MLS. Sure.
So
Yeah.
if we have a website that has an IDX feed, we can?
Yep. If your website has an IDX feed, you can, but again, you can only advertise your offers of compensation for your listings. Yeah.
On Facebook yesterday, I was looking and I came across, it was a lockbox. It looked like our blue lockbox,
Sure.
and it showed the lockbox open, and inside the lockbox was a little paper that said 3% commission.
Sure. Sure. Yeah. Yeah, so you guys heard that comment. Look, you can advertise off the MLS. Like you can have a sign writer. I don't think you need to be so inconspicuous. I think you can be very conspicuous about it. Yeah? Now let me clarify something real quick. So let's say it's a sign writer, in your case, a lockbox advertisement of compensation. That's different than what the MLS has right now. And here's how it's different. It's not a unilateral offer of compensation. It is simply an advertisement of compensation. Okay? So that advertisement in and of itself does not create a contract that obligates the seller or the listing brokerage. It's simply a solicitation for offers. It's not an offer in and of itself. Does that make sense? So and the best example that I can give is that, let's say the seller advertises on the MLS, hey, washer and dryer excluded. And then you know what happens. The buyer submits an offer and they ask for the washer and dryer. If the seller accepts, guess what? Washer and dryer are now part of the contract. So it's now going to be paramount that the parties now solidify in contract, and that's going to replace what the offer of compensation is on the MLS. Yeah?
So my seller wants to offer 50% commission.
Sure. Yeah, I mean, if they want to offer some sort of, compensation amount, I mean, they can. You have to have authorization to offer that, and then it's going to be a negotiation between the respective parties.
So a buyer's agent calls me, I say, yeah, he'll pay up to 50% commission on this.
Sure.
Okay. But that's how it's going to work.
Yeah, I mean, and bear in mind, the buyer's brokers cannot receive more than what's specified in their buyer-broker agreement. So my guess is that their agency agreement doesn't say that amount. Would be my guess.
Oh, it will.
It might. Now, again, from my perspective, you're going to want to justify your compensation, right? The irony is not lost on me with all of these antitrust lawsuits that my profession, the attorneys, kind of have a standard cut and rate when it comes to compensation, when it comes to splits. I hope it's not lost on you. I hope it's not lost on you. I recognize that, but that's the difficulty there. Yeah?
I think the most important thing as a broker, I would say that if you think you're being sneaky to offer something, you're probably going to get caught with it.
Sure.
So be aware that you need to stay within the lines because the Department of Justice is watching everything that's
For sure.
going on with the settlement.
And then NAR just came out with a DOJ that you cannot use some random website that's been
Right,
advertised.
they did already state that.
Yeah.
Yes. And actually this morning on one of the forums that I follow, that's a national one, their MLS fined them this morning because in the agent remarks, they made some type of little comment.
Sure.
that showed compensation.
Absolutely.
If you think you're being cute and sneaky about it, it's probably not going to be in your favor.
And that's a fair point. If I think that only real estate agents will be able to decipher the photo where the pillows are aligned in some sort of fashion, okay. You guys are smart, but look, other people are just as smart in seeing that, okay? They're going to be able to know what's going on. And to your point, the MLS is the enforcer of violations of these new rules. Now, if you're saying, well, how is the MLS going to enforce all of that? I think that's fair, but the bigger component for me is the DOJ, and it's going to be potentially 4 or 5 years out from here, new plaintiffs' attorneys saying, hey, I'm going to go after them for violating the terms of the settlement. They therefore lose their protection from liability and the release of liability. For me, that's the bigger concern than the short-term ramifications.
Why do you have to say that?
I have to say that because people, lose sight of it. They're like, well, who's going to enforce it? Who's going to check to see if I have a buyer agency, a written agreement, or something to that effect? Okay, there are a lot of good hands. I want to address them, but I want to highlight some of these forms real quick because I know we're getting short on time, and I'll stay after and answer some of these questions too. The other big change that comes, that you guys have probably heard about, is that when you're working with a buyer, before touring a home, you need to have a written agreement. Okay, you guys have heard that. You kind of discussed that a little bit. And that's going to be left up to your brokerage how that's implemented. Touring is a live virtual tour or in an in-person tour. That's how they defined touring a home. And this does just apply to residential. Okay, so it's not applicable to commercial. Now, this written agreement needs to have a specified dollar amount as to what you are charging for your services. And it needs to be clearly ascertainable. And it also needs to clearly state that compensation is not set by law and that it's negotiable. Okay, and that's all it needs to have. Now, the UAR has been intentional about the way to fulfill this requirement is to use the buyer-broker agreement. There are other ways you could do it, and we'll leave it up to those brokerages or boards or companies to satisfy it in some other way. From our perspective, the buyer-broker agreement is the best way because we feel that no matter how long or how broad the scope of the services are, that you are a fiduciary, that you are a professional. And so it's about time that we raise the level of professionalism. Okay, that is our perspective. Okay, so even if it's a 7-day, so you have a week-long buyer-broker agreement, the client should have fiduciary coverage for that. They should expect confidentiality, full disclosure, obedience, loyalty, reasonable care and diligence. We think that's a good thing. We think that is pro-consumer. Now, you cannot misrepresent the terms of the settlement to induce a buyer to sign something like this. This is already being challenged in Colorado, where some agents are stating, well, state law requires me, so before I can show the property, you need to sign this. That's not accurate. Okay, state law does not require them to sign this. Okay, so you're going to have a dialogue as to why you are asking them to sign something like this. And you can clearly highlight that the terms are negotiable between you and the client. And I understand that there's going to be a huge spectrum of someone that doesn't even know you and they're meeting you for the first time versus someone that has used you for multiple representation agreements. And I understand there's somewhere in the middle there. Okay, so we've tried to make the form as flexible as possible. Not a whole lot's changed, but the formatting has been addressed so that you can make it as pro-consumer and as easy to follow as possible. So the duration of time, an end date. Okay, so whatever you and the client feel comfortable. Now know this, that if you have a shorter end date, then that's the amount of time that you are loyal to that customer or that client. But that's also the amount of time that they are loyal to you. Okay? So it cuts both ways. Okay? So I've had some agents say, well, what if they end up using someone else on day 8 and I had a 7-day buyer-broker agreement? Okay, well then that's part of the fallout of you having a 7-day buyer-broker agreement. Okay? Have a longer term. Like, I'm not trying to be unsympathetic to that, but you may then use that as experience in future buyer-broker agreements where you then explain, hey, look, I've found that 7 days isn't a long enough window of time for me to establish a relationship. So I now require 14 days. Is that something that's satisfactory to you? I mean, there's ways to negotiate with the buyer, and I'll leave it up to the brokerages to highlight that. Now, the scope, you have what's already in the buyer-broker agreement, but you have county or property specific. That's already the case now. We just format it so it's easier to follow. Now, I want to make it very clear. It's deliberately and intentionally or. It's not and. Okay, so do not fill in both of these. Okay, and I know that happens right now because the property is located in the county and you think you're making it even more clear. You're not. You're making it confusing. Okay, so it's one or the other. Was there a hand over here? Yeah.
Just a question. So a lot of times I'll get people, buyers showing up to an open house that their agent just couldn't make it to.
Sure.
They sent them over.
Fair enough.
Are they supposed to have an agreement in place?
With the listing agent, that's...
No, not with the listing agent, but with the buyer's agent to send them over.
Sure. So let me answer this. So open houses, you are not necessarily verifying who has a written agreement or not. Okay? You work on behalf of the seller. Okay? So you can show the property during open houses. If they show it and someone wants to walk through the property without their agent, great, they can do that. They don't have to have you there. Now, obviously, there's some risks associated with that. Again, if I use kind of the attorney-client relationship and the analogy, there's some risks. Even going to initial discussions and having some discussions with the listing agent without my representation there, right? They can do it. It's legal. Same with the law. They can be pro se and be represented, but there are some risks inherent, and some people feel comfortable doing that. But that wouldn't require or necessitate verification on your end. Yeah?
You're the listing agent, have an open house, buyer comes in.
Yep.
He wants you to represent him, so now you're a limited agent. What is the best steps on how to protect ourselves from that point?
Sure. Which can already happen right now, right? Where an unrepresented buyer goes to an open house and they love the property and they say, look, I want limited agency. Okay, that's allowable in Utah. I would treat it as an exception, right? If I'm defaulting to limited agency, I think you may be named in the division newsletter sooner or later, to be fair. I just think it's an exception and should be treated as an exception. But that is allowable. And so the steps at that point would be to have informed written consent from both parties. And you would need a written agency agreement with the buyer.
So that's my next follow-up. The seller says, yeah, I'll pay up to a 3%.
Sure.
Is there a scenario that you could describe to kind of outline how that would be proper in limited agency? Because you've got your
Sure.
seller who you owe.
Sure.
And now you've got a buyer.
Yeah.
And you have to have an agreement with them.
Sure. Yeah. Yeah, if they want to be represented, the seller's fine waiving all of their fiduciary duties that you've at that point had for them. Yeah, you would just want to do it in full disclosure. You would want to walk through clearly to the seller, okay, this is what you owe me. The buyer-broker agreement is what the buyer's responsibility, but my guess is they're going to want that offset by you. Would you be willing to do that? And we can make an adjustment to our listing agreement, and I'll make an adjustment making it clear that that's offset by a third party. But I think it does get a little legally complex where you want to make it clear, walking it through and setting clear expectations with both the buyer and the seller. Yeah?
That should be a question you ask to your seller when you list the property.
Yeah.
Do you require a listing, a limited agency?
No, I understand all that.
That way you know whether it can be offered or not.
I understand.
For sure.
At what point do you start doing things like that?
I think you have to do that before you even enter into limited agency. So when I'm having a dialogue with my seller and they're potentially weighing the pros and cons of an offer potentially coming in, I think you would have to have that dialogue as to, okay, if we entered into limited agency, here's what compensation would look like. And then you let the seller make that choice. Certainly you have to be comfortable doing limited agency, which not all agents or brokerages feel comfortable doing that. Yeah?
So, in a scenario where you have agreed to terms with your buyer, but then you are looking at a property and there's an offer for marketing compensation, I am assuming the answer is
Uh-huh.
Saying, this specific property though, like, for a buyer, your compensation will be this. And then the rest of you have already negotiated, and the seller is paying that compensation, and so it's reflected accurately within this buyer broker agreement, so we're in compliance with the rules there.
Sure.
Is that allowed?
Okay.
Something that you're like, I'll see you in 5 years, and you're getting paid.
There's always that chance, right? I mean, attorneys have to eat too. No, I mean, they have to feed their families, and
They're eating good.
they're eating all right. They're doing okay. Yeah. So let me maybe kind of simplify your question a little bit. After entering into a buyer-broker agreement, is it amendable? Sure, it's amendable. But if you're doing it simply because the other side is offering more compensation, remember, you owe a fiduciary duty of loyalty to your client. Okay? So that is spelled out under the admin rules as putting the interests of the client even ahead of your own interests. Okay? So if you have a compensation amount in your buyer-broker agreement and it's X percent, but the seller or the listing brokerage is offering Y percent and it's substantially higher, and you said, man, I want to realize that differential because that benefits me. That's the wrong question to ask. Because again, your fiduciary duty of loyalty is what is in the best interest of my client. That differential may be beneficial to your client. And that may be a negotiable term where you could potentially get a lower purchase price. Or you could ask for additional closing costs. All I'm saying is that has to be a very conspicuous conversation that you have with your buyer. And then if your buyer says, yeah, let's go ahead and modify, which I'm not sure why they would want to modify the buyer-broker agreement to allow for that. But if they do, I think it's best that there has to be some sort of benefit to the buyer as well for you to realize that differential.
Or the other way around, going down.
Going down, I don't have any problem with it. But again, I would be very conspicuous about it from almost a self-serving standpoint because I want my client to know what I'm doing on their behalf. Because they already agreed the value of my services was X. I'm willing to take a little bit less or whatever it is. I'm willing to take Y. But I want them to know that that's what I'm doing on their behalf. Because I just think that that'll endear you to them, and I think you'll get referrals potentially from that. And frankly, it's highlighting how you're sacrificing on their behalf. Right here and then right here.
Is there any recommended language for an addendum to the ERS if we're offering a variable compensation rate for limited or unrepresented buyers?
We're working on some language because we are getting some feedback about how the listing agreement has a set fee for your services, but it doesn't contemplate all of the potential scenarios. The reason why it only has that one fee is because we wanted to keep it as simple as possible. Because the more blanks that we have in our forms, the more chances that agents could potentially mess them up.
Right.
And so,
Probably all going to be using our own language to write that addendum to the ERS.
for sure.
If we work on a variable scale, so I was just wondering if maybe we could
Yeah.
give guidance for precisely how to include that.
I think no matter what language you use, you want to make sure it only has one interpretation. If it has dual interpretations, or if someone else reads that language and says, well, I actually think it means this, then it's what we call ambiguous. And you want to avoid ambiguity.
And just to follow up, if there's some agents in our organizations that are taking Zillow leads, does Utah think that the Zillow touring agreement meets the criteria, or are we one of those states that it doesn't? Or how do we advise our agents if they're taking Zillow leads and they have that touring agreement?
We're not opining on the legality of their touring agreement. We do think that that other written agreements could satisfy the terms of the settlement. So the buyer-broker agreement is not the only way, but as long as a touring agreement has all of the elements required under a written agreement, then it would satisfy the terms of the settlement. But yeah, we don't opine on other brokerages, forms, or addenda, or in this case, a touring agreement. Yeah. Oh.
Sorry, do you recommend that we have our attorneys look it over? Like, how do I make sure
Yeah.
that my agents are protected if they go ahead and use the Zillow form
For sure.
when they get a new Zillow lead for 7 days?
If your brokerage is going to be utilizing someone else's form, then I think it is advantageous for you to have your own legal counsel take a look at it.
Okay.
Right here and then right here.
So if I may, so how do you know a verifiable seller, a listing commission that's offered to a buyer broker. How do you know that that's verifiable and substantial, and what is actually on the document that you filled out with your client as a listing? Because I don't see that happening.
Sure, so you're asking for verification. How do I know as a listing agent what the buyer-broker agreement says?
What responsibility does the listing agent have to the showing agent, the buyer's agent, for proof of a written document that the seller of the house is saying, I'm offering a 3.5% BC, and I think I'm playing a little shell game on the street somewhere. Like, where
Sure.
Here, you know?
Yeah, I mean, there's nothing that would require verification. Certainly under the respective agency agreements, you need to have authorization. So under the listing agreement, I need to have authorization to advertise offers of compensation. I need authorization. And if I'm playing fast and loose with the rules or kind of using my own discretion, then again, I may be violating my fiduciary duty to my client. And so I wouldn't be advertising something that goes beyond what my seller's given me authorization for. But the only way to have verification or assurances that your compensation as a buyer's agent is going to be offset by a third party is having something in writing, whether it's in the REPC or it's the separate form, the real estate brokerage compensation agreement, which replaces the escrow instructions.
So effectively, whatever anybody talks to you on the phone with, puts on the website or anything else, mows it into the lawn.
Sure.
It's all hot air, meaningless until it's put in writing.
It's merely a solicitation for offers. Okay? So for you to have complete assurance, you're not going to have that until you have something signed and in writing. And that is a shift from the MLS, because the MLS is the contract, right? It's not just an advertisement. It is a unilateral offer of compensation with 3 contractual components to it. Meaning the buyer's agent brings a ready, willing, and able buyer. That's accepted by the seller. That results in a successful transaction. Without all 3 of those elements, the MLS contract is not in place. And so we had to have something to replace that. It could either be in the REPC, which I think the vast majority of offers are going to ask for compensation in the REPC. That's the easiest. It makes sense. That is probably going to be the #1 place where that happens. The second would be a separate agreement between the respective brokerages. My guess, that separate agreement is going to be utilized in a buyer's market, or if the property's been on the market for an extended period of time. Because at that point, the buyer knows, okay, I may have more leverage. I would love for this to be satisfied before submitting an offer so that it doesn't become a negotiable part of the REPC. I mean, that makes sense, but that's to the advantage of the buyer, and I think market conditions are going to dictate when and how brokerages are going to offer that. Or if the brokerage even enters into it. I've heard of some brokerages say, no, we need everything in the REPC. Great. Like, it doesn't matter to me. I just want you to have the tools where you have flexibility one way or the other. Okay, just a couple more questions, and then I'll go through some of these. Yeah?
Can you put the buyer compensation for an acquired in the house?
Yeah.
You can.
Yeah, it's off the MLS. That's perfectly fine. Sure. Yeah, at an open house. Sure, you can do that. Yeah.
So at the beginning of this, you said, don't say to buyers, state requires you to sign this.
Correct.
But they are required to sign it. So what do you want them to say?
I don't want you to misstate that state law requires you.
Who requires it?
It is under the terms of the settlement. So by virtue of your membership with NAR, and you're agreeing to be abiding by the terms of the settlement, that's the requirement.
Our own association that we belong to is who's requiring our buyers.
It's part of the settlement. And in exchange for that is the release of liability. So from everything going back up to this point, you are released from liability, so the threat of litigation involving the class action of sellers has now been released for you and your brokerage. But it's only if you abide by the terms of the settlement, and one of the terms of the settlement is that I will have a written agreement with a buyer prior to touring a home.
You also said at the beginning of your presentation, notices are going to start going out about the settlement.
Right.
So can you clarify, because I did have a client call and say, hey, I read about the settlement.
Sure.
Can I get that money I paid to the buyer?
Yeah, so the comment is, well, you mentioned at the beginning, no earlier than August 17th, that notices of a class are going to be going out nationwide to sellers. What is that going to look like? Are sellers now going to get the entire commission that they paid back? No, they're not going to get that. It's going to be somewhat similar to if you've ever gotten a notice for, I don't know, I think Facebook was a big one recently. I think Apple had some. I think there was some other. There's notices always going out. It's going to be like a postcard advising them to go to a website to opt in to the class. And then they'll get a cut and they can choose how they want to be paid.
Roughly how much will that be?
It depends on how many people opt into the class. They're going to be splitting the $417 million. After attorney's fee, yes. Attorneys have to eat too. I don't know what's the big deal, okay? Okay, is it all right? Okay, I'm going to pause right here. Let me just go through this real quick and then I'll get your questions because I want to be respectful of all your time. What is key right now under the buyer-broker agreement that I just want to stress, more of these could potentially be signed earlier because the majority of licensees in Utah are realtors. That's just a fact, okay? So the majority of these are probably going to be signed earlier rather than later. Right now, state law would require you to have something in writing to define the scope of your representation no later than the time of the writing of the offer, which is different than what the settlement is requiring. So you do have an affirmative obligation, and frankly, you've always had this, to ask, are you working with someone? Have you signed anything? And you'll notice that the new language in the buyer-broker agreement not only asks these questions, but allows you to exempt or to cancel out those representation. Not cancel out, I shouldn't say that. Exclude from your representation someone else's representation if there's overlap there. Okay, so it's allowing you to ask that question, and frankly, you should already be asking that question. Okay, now I've had the question, well, Craig, what if I sign a 7-day buyer-broker agreement, and my buyer wants to write an offer, and we do, but it's obviously not going to close because it's after 7 days. Do I need to amend this contract to extend it out? And the answer is no, because we already pre-filled that in for you. You'll notice that this last sentence, in the event this exclusive buyer-broker agreement expires while the buyer is under contract on any real property identified in Section 1.2, the company and the buyer mutually agree that the initial term shall automatically be extended. Okay, that's not meant to be a gotcha. It's just meant to be user-friendly that, hey, we don't need to create an additional addenda. And then if that contract falls out, then this is automatically canceled as well, okay, because it's already gone past the expiration. Okay, so just be aware of that. Brokerage fee section, I know there's a lot of yellow, but it's really just putting in the new settlement language that you can't receive more than what your brokerage fee says.
I was just noticing where it says gross, so we don't have an option of gross or net.
It does say gross. The default under the existing one was gross. It just didn't say it. It just said acquisition price. That is gross. Okay, and so we wanted to clarify that it's gross. If you want to modify it that it's net, go ahead. But your buyer-broker agreement, as it said right now, it was gross. Okay, it was gross. Now I know what you're probably asking, well, what about the listing agreement and modifying gross or net through the data input form? Well, the data input form goes away because there's no longer offers of compensation on the MLS. And so we did create a default saying it's gross, and if you want to modify it to net, you can. But we wanted to make it explicitly clear because, again, our forms are under heightened scrutiny as being as transparent as possible. Because they were already being interpreted as gross, we wanted to keep it as gross but say it explicitly. Okay, and then lastly, the protection period. I want to highlight this. This protection period now mirrors what is already in the listing agreement. Okay, the way that I think of this protection period is that it is a protection if the buyer goes under contract with the seller directly. And that's it. Okay? It is not meant to be a gotcha to trap a buyer. Okay? We feared, and we don't think that this was going to happen widespread, what we feared is that buyer's agents would fill in maybe a short window of time here under the duration, maybe 7 days or 14 days or whatever it may be, but then put a lengthy protection period 3 months, 6 months, right? And the buyer is not going to care about that. They think that you only represent them for those 7 or 14 days, right? And so we didn't want a situation where the buyer could potentially be subject to multiple sets of compensation when in fact they're only working with a representative. So you'll notice that this language, again, it mirrors what is already in the listing agreement, that the protection period is severed when the buyer is obligated to pay a broker's fee on the acquisition to another brokerage based on another buyer-broker agreement. Okay, again, we know that the CFA, looking at our forms and frankly California, we wanted to make it as user-friendly as possible. Yeah?
You need to state clearly so everybody understands, procuring cause does not exist in Utah anymore.
Procuring cause, yeah, procuring cause it's going to be very limited. It's not extinguished completely, but for all intents and purposes, I don't foresee many arbitrations happening over procuring cause.
The verbiage right there states that if they go into an agreement with another agent when that one expires, that one's out.
Doesn't matter if you showed the property first or worked with them first.
Contract or anything.
And if you say, well, Craig, I want more protection. Okay, lengthen the initial term. Okay? I mean, we don't want the protection period to be a de facto extension of the initial period. We want to be as transparent and upfront as possible about what is the service that I'm providing to the buyer and what is the duration. We don't want the protection period to be used as a gotcha because we did fear that there could, I don't think it would be widespread at all, but there could be someone using the protection period and weaponizing it to try to trap buyers. That is not the goal or what we want our forms to be used for. Okay, and that's one of the reasons why the listing agreement has this language already, is to not trap sellers. If you didn't sell the property for whatever reason during the term period and they choose to use someone else, great. You have zero obligation to them. Frankly, they have zero obligation to you. And I know that sounds harsh. I don't mean to be harsh about it, but that's I want to be frank about it, okay, and not have any misconceptions about it. Yeah, if they wanted to circumvent using a real estate agent and deal directly with the buyer on a property that you showed during that term period, this would be enforceable. Okay? Okay, I'm going to go ahead. I know we're short on time. I'm going to go ahead and pause there. All of the resources. So you've got my videos that go through each of the forms. The legal hotline. It is busy right now. Our number one question is dealing with these types of questions, and so I'm happy to address them. I understand that it may be a little bumpy going forward, starting tomorrow, right? August 14th, the offer of compensation on the local MLS goes away. But as was reiterated at the beginning, buyers still want representation, sellers still want representation, and frankly, they want help with that. I mean, many of you have had buyers or sellers said, I read something, how does this apply? They know you, they want you to be paid, and they want your services, and they don't have an issue with paying you because they see the value in it. That does not go away. So we're here to support you as much as possible. Thank you so much.
Thank you.
Yeah, thank you.